Welcome to ChinaSecurities.com. I'm George Tsiolis, co-founder of China Securities, and welcome to another installment of China Securities Small Cap Webcast. Today, I'm happy to bring you Telecom, trades on the NASDAQ under the stock symbol CTEL. This is a company whose subsidiary is the second largest and fastest growing broadband service provider in Hong Kong. With us today to discuss the company is Nick Lai, CFO of the company. Nick, welcome to the show.
Thank you, George, and good morning.
I understand you've been on a roadshow as of late, crisscrossing across America, speaking to fund managers, brokers, and institutions. And your stock chart seems to tell me that the story has been very well accepted because you've definitely been on the rise as of late. What is it about the company that the street has now discovered?
George, Telecom, CTEL, is essentially the Verizon Fios of Hong Kong. We built this fiber network at 1/5 the cost of Fios due to the density of Hong Kong.
And as a result, it looks like you've had some pretty great revenue growth over the last 12 months. I see that your trailing 12-month revenue number is $168 million. From that, you netted about $19.7 million, and that gives you an earnings per share of just under 60 cents. So you're trading it at a 10 times PE?
Yes, George. We are actually posting record growth through this economic crisis by taking market share. Because we have built a fiber network that's completely end-to-end and bypasses the incumbent, we can offer services that no one else can match. This is similar to what happens when Verizon lands in a new suburb in the U.S. It tends to do very well because of the fiber advantage that it also enjoys.
What I really like about some of your materials that I've seen is that you guys have excellent marketing. For example, I like the fact that you've stated your big, hairy, audacious goal, BHAG, to become the largest IP service provider by 2016. So, first of all, that's great marketing. Maybe you can tell me a little bit about how you've taken that bit of unorthodox but effective approach. And B, more importantly, are you on track to hit that goal by 2016?
George, that term, big, hairy, audacious goal, comes from a great book by Jim Collins. It's called Good to Great.
Right.
Our whole management team has embraced that book, so that's part of our required reading for the whole team. We have set ourselves a specific goal to become the largest IP service provider in Hong Kong by 2016, and we set that goal in 2006. We're now 3 years into that goal, and so far I'm happy to report that we are well on track for that goal.
What's your competitive advantage that's really helping you literally beat up the incumbent? Is it the fact that it's this brand new fiber network? Is it your marketing? Is it your pricing? What's been your secret sauce, and why is Hong Kong really taken to City Telecom?
George, I think it's a number of factors. The moat that we have built, the protective moat that we've built around our business, has really taken $380 million in investment over 10 years. We've been at this game building the fiber network for the last 10 years. And it's only in the last couple of years that the network was fully completed. So you can see it in the numbers and the subscribers and the operations. It took us 7 years to hit free cash flow break even. And since then, since 2007, we've been generating positive free cash flow, harvesting the cash, and paying dividends. In fact, we went from a highly geared company in 2005 to being essentially net debt-free by buying back the bonds during the economic crisis at below par.
I got to admit, I was very impressed by the fact that in 2005 you raised $125 million, and just 4 years later you paid back $104 million of that. That puts your balance sheet in a pretty strong position when it comes to your debt ratios. Correct?
It is. We're essentially in a net debt-free position today. In 2005, we really had to double up on the company. We were halfway through our network build, and we needed more money. So we actually went out on a limb and backed the truck into the business. We borrowed $125 million when our market cap at the time was $80 million. So we really went for the home run on that one. Luckily, it paid off. We now have a complete network. It's state-of-the-art, and it can deliver services that nobody else can match on a legacy network in Hong Kong. And that's why we are winning market share in Hong Kong. And at the same time, we're actually raising our average revenue per subscriber. And that all flows through to better numbers.
Right, and I've got those numbers in front of me. I'm looking at your presentation where back in 2005, your ARPU, your average revenue per user, was about $14.5, and as of the first half of 2009, it's up to 25.1. So is that a combination of is that a combination? Is that your triple play broadband, voice, and IPTV all kicking in at the same time?
Yes, I think there's a combination of factors. You know, the underlying fiber network is now coming together. And just as importantly, the demand for ultra-high bandwidth is coming through. Think about it. We are today essentially living the dreams that we talked about the internet takeoff back about 10 years ago.
Right.
Think about services like Facebook, Hulu, YouTube. All of these services are less than 5 years old. So the demand profile has really kind of aligned with our network capabilities only in recent years, and we've managed to take advantage. We've been lucky to take advantage of that.
So let's talk about where you're focused right now. Obviously, because of Hong Kong density, you've really it behooves you to be there and doing a great job and client acquisition. But once any plans to go beyond Hong Kong once you hit your targets, or the growth prospects just so big for Hong Kong? And the investment, the capital investment you've made has been so large that you really want to focus on that for many years to come.
George, our market in Hong Kong is $3.6 billion US, and it has been growing at about 4% per annum for the last 3 years.
Right.
We're a 200 million market cap company, so it's a massive market for us. I think when it comes to management strategy, it's about as much about saying no and staying focused as it is about being aggressive, chasing new growth. So I think we believe we're pretty good at what we do. We want to stay very focused at what we do and do it well and deliver on our BHAG, Big Hairy Audacious goal of becoming the largest IP service provider in Hong Kong by 2016.
Well, let's talk a little bit about your. I'd like to talk a little bit about possible competition, specifically in terms of technology, because we do know that wireless is definitely growing around the world. We do know that mobile is going to be very important going forward. So do you have any concerns that people may increasingly turn towards wireless or mobile and actually chew into some of your market share going forward, or and if so, do you have any plans to move into wireless or mobile?